Hello, everyone. A really warm welcome to you, and thank you so much for taking the time to come and watch the video today.
Yes, thank you for joining us.
We're really excited to have you here. Today, we are unpacking the massive Salesforce Fiscal Year 2026 fourth quarter earnings call.
And honestly, if you are at all interested in where enterprise software is heading over the next decade, you absolutely have to pay attention to this one.
You really do.
Because it's usually earnings calls are just about looking backward.
Yeah.
How did we do the last 3 months? But this one felt completely different.
Yeah, it had this real pivot point energy to it.
Exactly. This was Mark Benioff essentially planting a flag in the ground. They are calling it the Agentic Enterprise. And it feels like they are trying to fundamentally rewrite the operating manual for how businesses use software.
It really does. I mean, Benioff was broadcasting from the 60th floor of the Salesforce Tower in San Francisco, and he kept talking about how it was a beautiful day.
You're definitely in a good mood.
Oh, totally. And judging by the sheer volume of numbers they threw at us, he clearly felt the financials matched the weather. But before we get totally lost in the AI hype, we have to look at the scoreboard, right?
Right.
How did the core business actually perform? Let's summarize the company's prepared presentation before we get to the Q&A.
So the headline numbers were solid. Maybe not explosive, but very solid.
Hmm.
For the full fiscal year, revenue hit $41.5 billion.
Which is huge.
It is. It's up 10% year over year. And then for the fourth quarter specifically, they brought in $11.2 billion, which is up 12%.
So double-digit growth at that massive scale.
Exactly. But if you really want to understand the health of a SaaS giant like Salesforce, you don't just look at revenue. You have to look at RPO.
Right, the remaining performance obligation. So for anyone watching who might not track SaaS metrics on a daily basis, could you just quickly break down why RPO is the real number to watch here?
Sure. So revenue is just what you have already billed. RPO is the backlog. It is the total value of all the contracts they have signed but haven't fulfilled yet.
It's like a crystal ball for future revenue.
That is the perfect way to look at it. And Salesforce crossed a massive milestone here, $72 billion in total RPO. That's up 14%.
Wow. $72 billion.
Yeah, and Benioff actually addressed some social media chatter during the call about this. Apparently, there was some tweet claiming RPO doesn't matter anymore, and his response was essentially, well, if it does matter, we have $72 billion of it.
That is quite the safety net to have. That is $72 billion of committed future business just sitting there.
Exactly. And if you look at the current RPO, which is just the revenue they expect to actually recognize the next 12 months, that was $35.1 billion, up 16%.
So despite all that narrative floating around that legacy sauce is dead, the core engine is clearly still humming.
It is. They even updated their fiscal year 2030 target to $63 billion in revenue.
Okay, so the core business is incredibly stable. But the thing that really made headlines, and I know this caught your eye immediately, was the capital allocation.
Oh, absolutely.
They announced a share repurchase authorization of $50 billion.
$50 billion.
That is just a staggering amount of money to spend on your own stock.
It is huge. And you really have to look at the psychology behind it. Benioff was very blunt on the call. He said this is, quote, not a rational market.
Meaning he thinks the stock is undervalued.
Right. He believes the market is pricing Salesforce way too low given the massive cash flow they generate. So they are essentially buying Salesforce because, in his view, it is the absolute best investment they can make right now.
It's a pretty aggressive flex. It's the CEO basically saying, the market is wrong, we are right, and we are going to put $50 billion behind that opinion.
And they bumped the dividend by 5.8% too.
Yeah, which just adds to that signal of confidence.
Yeah. It signals confidence, but it is also a defensive move.
Yeah.
It puts a floor under the stock price. It tells investors, hey, look at our cash flow. They're expecting over $16 billion in cash flow.
Right.
When you have that kind of money machine, you can afford to buy back stock and still invest heavily in all the new stuff.
Well, speaking of the new stuff, let's transition to the buzzword of the day, which was Agentic Enterprise.
It was everywhere on this call.
Oh, we have heard about AI agents for a while now, but what is the specific strategic shift Salesforce is describing here? How is this actually different from just, say, adding a smart chatbot to your CRM?
This really is the crux of their whole strategy moving forward. Benioff's argument is that for the last 20 years, the enterprise model was apps.
Okay.
Humans log into an app, we click buttons, we enter data, and we log out. The new model is apps plus agents. It is moving from tools that humans use to agents that actively do work alongside humans.
So instead of me searching for a customer record and manually updating their status, the agent just does it.
Ideally, yes. And they put a real number on this traction during the prepared remarks. They claimed their AgentForce and Data 360 annual recurring revenue, their ARR, now exceeds $2.9 billion.
Now, that sounds incredibly impressive, but we should probably qualify that number a bit for the audience. That $2.9 billion includes their recent integration with Informatica, right?
It does. And that is a very key detail.
Yeah.
It is not all brand new AI revenue generated from scratch. A lot of it is data infrastructure revenue.
Got it.
But strategically, that actually makes perfect sense because you cannot run these advanced agents without pristine data. If the AI doesn't have access to your complete customer history, it's useless.
Right, it just hallucinates.
Exactly. So bundling the data revenue with the agent revenue gives a much clearer picture of the overall AI stack they are selling.
And this shift to agents also brings up a really fascinating measurement problem. In the AI world, everyone is obsessed with tokens.
Right. How many tokens did the model process?
But Salesforce is trying to change the scorecard entirely.
This was honestly one of the most interesting conceptual parts of the call. Benioff and their Chief Marketing Officer, Patrick Stokes, introduced a completely new metric called the Agentic Work Unit, or AWU.
Agentic Work Unit. It sounds a little bit sci-fi.
It does sound sci-fi, but the underlying logic is really sound. Their argument is that a token is just an input cost. They process 19 trillion tokens, by the way. But measuring tokens is like measuring how much electricity a factory uses.
Right. It tells you the cost, but it doesn't tell you how much furniture the factory actually built.
Exactly. An AWU represents actual, tangible work done. A record was updated, a decision was made, a complex workflow was triggered, and they delivered 2.4 billion AWUs.
I really like that distinction because if I'm a CFO, I don't care how many tokens my AI burned through. I want to know how many customer support tickets it closed or how many sales leads it qualified. It is a fundamental shift from measuring thinking to measuring doing.
Precisely. And to prove that this isn't just theoretical marketing, they brought out several customer success stories. And I think these are important because they show what doing actually looks like in practice.
Right. Let's look at a few of those. They brought up Shark Ninja. They make vacuums, kitchen appliances, consumer goods.
Benioff actually mentioned he has their slushy machine and made mango sorbet.
Which was a nice human touch on an earnings call. But business-wise, what did Shark Ninja actually deploy?
So Mark Barocas, the Shark Ninja CEO, talked about deploying a guided shopping agent. And they set this up in just 8 weeks, right before the massive holiday rush.
Wow, 8 weeks is fast for enterprise software.
It is, and it handled 250,000 consumer engagements. But the key here isn't just that it chatted with people. It handled product research, the buying process, and troubleshooting, all in one continuous flow.
So basically condense the entire sales cycle. Instead of a customer browsing a website, getting confused about which vacuum to buy, and just leaving, the agent actively guides you to the purchase.
Exactly. It drove down costs and significantly improved service speed.
Then you had Wyndham Hotels. This is a totally different use case. This was all about data unification.
Jeff Bellotti from Wyndham spoke about this one. They have 5,000 deployments of AgentForce. And the value prop here was really interesting because it addressed a frustration we all have. Walking into a hotel and having the front desk ask you the exact same questions you have answered 10 times before.
Right. They used Salesforce to unify all their guest data, so the AI agent knows absolutely everything about you instantly. Benioff even joked about getting a late checkout because the system knows his stay history.
But the business impact of that is very real, right?
Absolutely. It drives upsells. An agent can intelligently offer you a spa treatment or a room upgrade right at the perfect moment because it knows your preferences. They saw a 400 basis point increase in guest satisfaction. And finally, they highlighted a much smaller player, Sastra, with Jason Lemkin. I thought this was a crucial inclusion because usually these earnings calls only feature the massive Fortune 500 giants. Why highlight a smaller tech media company?
To show democratization. Sastra completely replaced a 15-person team with agents and a very small human team. They claimed an agent closed a $250,000 customer entirely on its own.
Wait, autonomously?
Yes. Finding the contact, engaging them, and closing a $250,000 deal. That is the dream promise of AI. A 6-figure deal with zero human intervention.
That is the specific metric that terrifies sales teams and absolutely thrills CFOs, a fully autonomous deal cycle.
Exactly.
Okay, before we get into the analyst Q&A, Robin Washington gave some guidance for fiscal year 2027. What are we looking at for the future?
They are guiding for revenue between $45.8 and $46.2 billion. That works out to about 10 to 11% growth.
So steady.
Right? It is not the 20 to 30% hypergrowth of the old SaaS days, but her focus was heavily on profitable growth, and she expects a reacceleration of revenue in the second half of the year. She also noted that Informatica landed in 6 of their top 10 wins.
Which is huge validation that their strategy of selling the data foundation right alongside the AI is working perfectly.
Exactly.
Okay, let's transition to the Q&A session. This is always where things get interesting on these calls. We are going to do a deep dive into the analyst questions one by one.
What's up?
First up, we had Keith Weiss from Morgan Stanley, and his question was pretty direct. He acknowledged those eye-popping AgentForce numbers we just discussed, but he pointed out that the CRPO, that backlog of current business, was slightly disappointing.
It was in line with guidance, but usually the market expects Salesforce to beat that number.
Right. So he essentially asked, can Salesforce actually do both? Can they aggressively grow this new AgentForce business and sustain the momentum in the broader legacy portfolio? Can the new stuff catalyze the old stuff?
This is the classic innovator's dilemma question. Are you cannibalizing your old business to build the new one? Mark Benioff stepped right in and emphasized that Salesforce is a comprehensive business.
Meaning they aren't abandoning the core.
Right. They are innovating the future while simultaneously renewing the legacy subscription business. He actually stated that the quarter exceeded his own expectations.
And Robin Washington added some really good color on the monetization strategy there too, didn't she?
She did. She explained that they are monetizing AI in multiple distinct ways, through premium SKUs, through consumption models, and through traditional seats. And importantly, she noted that seats are still growing.
So it is not an either-or situation.
Exactly. It is a hybrid model where AgentForce drives incremental value to the core software offerings.
Okay, moving to question 2. Next up was Brent Thill from Jefferies. He went straight for the big money question regarding that massive $50 billion buyback.
Yeah, he did.
With tech stock multiples falling generally, he asked why prioritize buying back stock over leaning harder into M&A. Basically, why not use that cash to acquire other technology companies?
This goes right back to Benioff's opening remarks about the market. Benioff views the current stock price as a great buying opportunity because of broad market dislocation.
He really thinks they are on sale.
He does. He explicitly said he believes the company is under-leveraged on debt and has massive cash flow. Like we said, over $16 billion expected.
So the strategy is essentially just betting on themselves.
Exactly. They will still do M&A, they will still pay dividends and manage debt. But Benioff was very clear. Buying back their own stock at these current prices is the most prudent investment.
That is such a strong signal to the market. Okay, let's look at question 3. This came from Kirk Mattern at Evercore. This was all about the frenemies in the AI world.
Such a fascinating dynamic right now.
Truly. He asked about the lines of demarcation between Salesforce and their AI model partners, like Anthropic. Is there a concern that these partners might eventually just become direct competitors?
This is the existential question for software companies today. Benioff used a really helpful visualization of the stack to explain his view. He puts the foundational models, OpenAI, Anthropic, Mistral, at the bottom infrastructure layer.
Like a utility.
Right, like the power grid. He views Salesforce as the platform and application layer that sits entirely on top of that infrastructure.
So the argument is that raw intelligence from a model isn't enough to actually run a business.
Precisely. Benioff argued that while models provide raw intelligence, Salesforce provides the system of work. They provide the specific business context, the enterprise-grade security, and the workflow to automate complex tasks.
Like running a banking service center.
Exactly. A raw language model simply cannot do that alone securely. Salesforce is the necessary wrapper that makes the raw model actually useful and safe for a massive business.
That makes a lot of sense. You absolutely cannot just have a raw chatbot run a bank's customer service without an intense security and data layer.
Right.
Okay, next we had Gabriela Borges from Goldman Sachs. She asked about that new metric we mentioned earlier, the Agentic Work Units, the AWUs.
The 2.4 billion units of work.
Yes. She wanted to know how this conceptually translates to actual money. How does it impact pricing, monetization, and their gross margins?
Patrick Stokes, the CMO, took the lead on the metric part of her question. He reiterated that crucial difference between tokens and AWUs. Tokens are simply an input cost. AWU is the actual output value.
And tracking both gives you efficiency metrics.
Exactly. The ratio of tokens burned to work completed creates deep efficiency insights for a company.
And what about the financial side of her question?
Rob in Washington clarified that gross margins are expected to be neutral in the short term. She noted that token costs, the literal cost of running the AI, will drop over time as they commoditize. Plus, their engineering teams are constantly optimizing efficiency.
And then Miguel Milano, the chief revenue officer, chimed in too, right?
He did. He outlined the 3 specific ways they're actually monetizing AI right now.
I thought his answer was really clarifying. What were those 3 ways?
First, upgrading their existing install base to premium SKUs. And he noted that adoption tripled quarter over quarter.
Wow.
Second, selling brand new seats, because the return on investment for customers is so much higher with AI attached. And third, selling consumption credits, which they call fuel for those customer-facing agents.
So it is a very deliberate, multi-pronged revenue stream.
Exactly.
Okay, the final question came from Remo Lencho at Barclays. He asked a really practical question about adoption. If this cross-selling of AI is working so well, how do they plan to get the message out to the broader customer base?
Because there's a gap there.
Right. He noted they have 23,000 customers adopting but 29,000 transactions. What are the actual roadblocks to getting everyone on board?
Miguel Milano focused on the messaging challenge. He said the focus is on explaining to customers that SaaS is actually more important than ever right now. You need SaaS to convert that raw LLM intelligence into reliable, safe work.
But the really interesting part of the answer came from Patrick Stokes again, regarding the user interface, didn't it?
Yes, this is a massive shift, essentially the death of point and click.
Which is wild to think about.
Yes. He said the user interface of work is fundamentally changing. Old enterprise apps were all point and click. The new interface is conversational. And primarily, they see that happening through Slack.
So Slack is no longer just a place to send emojis to your coworkers.
Exactly. The strategy is using Slackbot as the literal front door to the enterprise. You don't have to leave your collaboration environment to get complex work done. You just ask the agent in Slack.
And to help customers actually build that reality, they are deploying a new role, right?
Yes, FDEs. Functional domain experts. These are specialists helping customers physically deploy this new conversational tech into their specific workflows.
So Slack really becomes the remote control for the entire company.
That is fascinating. Well, that wraps up the Q&A portion. Let's zoom out a bit for the audience.
Okay.
If you had to provide a high-level wrap-up, really synthesize the main themes from this entire presentation and Q&A, what stands out to you the most?
I think there are 3 main pillars to take away from this. First, the agentic shift is real.
It's not just a buzzword anymore.
Right. It is not just marketing hype. They have $2.9 billion in ARR and highly tangible customer stories like Shark Ninja and Wyndham, proving that these agents are doing actual complex work. They aren't just writing polite emails.
And the second pillar.
Pure financial confidence. That $50 billion buyback is a massive signal to the street. Leadership clearly believes the stock is undervalued, and they are aggressively flexing their muscles as a cash-generating machine.
Which gives them the breathing room to make these big strategic pivots. And the third theme, the creation of a completely new business model. They are transitioning from just selling software seats to selling actual work output, those Agentic Work Units and consumption. And they are backing that entire shift up with a new conversational interface in Slack.
It is a fundamental change in how enterprise software is built, sold, and used on a daily basis.
It really is.
It feels like a pivotal moment in tech history. Salesforce is positioning itself not just as a CRM system anymore, but literally as the operating system for this new world, where AI agents and humans work together seamlessly.
It is a massive scale of transformation.
Rah.
They are betting the farm on this hybrid future, and honestly, based on the numbers they just reported, the bet seems to be paying off so far.
It really does. You know, it leaves me with one really provocative thought for everyone watching to mull over. If Salesforce truly becomes this operating system and AI agents handle all the routine point-and-click work that we used to do manually, how do new human employees learn the business? Because entry-level jobs are traditionally built on doing that routine work to learn the ropes. If the agent does it all instantly, are we accidentally removing the training ground for the next generation of human experts?
That is a fascinating question. The nature of entry-level work is going to have to change entirely.
It's going to be wild to watch unfold. Well, that brings us to the end of our breakdown. Thank you so much to all the viewers for watching the video today. We really hope this helped you unpack what was a very dense and incredibly important earnings call.
Absolutely. Thanks for watching, everyone.
And if you enjoyed this breakdown and found it valuable, please explicitly click like, share the video with your colleagues, and subscribe to the channel. We have a lot more deep dive content coming up, so stay tuned. Thanks again for joining us, and we will see you next time.